Good morning, everyone. It's Goose here. A couple of people just send me a quick message. Make sure you can hear me and see the slides. Just a few people, please. Learning to use the dashboard. All right, sounds good. Okay, attention to order here. AR weekly debrief, 10 a.m. here. We're gonna do a combination of accelerated retirement and weekly debrief. Obviously, Wiz is traveling today. He's headed down to meet the guys and do the No Fallen Heroes project that we've been working on so far. Here's a picture of our new folks that are involved here from Capital and Daniel Carcillo as well from Wasana, and that's Lee Simons on the right and me on the picture left. No Fallen Heroes. Everyone follows that. There'll be a little bit of a delay to it. We'll probably be a little bit more into the summer, working on the issues with that right now. But everything is going great. Just a lot to do, and it's exciting. It's awesome. I'm so fired up about this whole project. I've been along on the ride with everyone, and it's just amazing. And I wanted to thank everyone involved here. There's a lot of you that are personally involved, financially involved, and have a lot invested in this as well. So I wanted to thank you for that as well. So let's get to it here. You've seen the slides already here. For disclosures for me, I'm going to tell you right up front, I'm a little longer than I want to be. So I have some Amazon, some Disney, and Facebook shares. Wasana, that's WSNAF, that's Daniel's company. So I have a few shares of that. Have an Apple Synthetic out to 2024. Some BA calls on out to March. And then this Rivian and Upstart cash secured puts I'm getting killed on because I screwed that up. And then I've got some Bitcoin / Mara Riot Hut on. I just sell calls on that. And some short SPX, same ones you all have probably. And with it up today, I'll end up reloading this probably a little bit soon. Upcoming schedule. So I got the stick today while Wiz is traveling. Coming up, got some full throttle academics early Feb, and then training starts later in Feb. Also, the MABT or the Max Afterburner and Hunters, we want to keep that in your cross check because you get the live trades. On the Hunters, you get all of Wiz's live trades and some of mine. When you are in lifetime, of course, you see the trades and you also see intelligence threads 24/7. It's an awesome deal to be in there. It's like a hedge fund. And we have a lot of fun in there as well. But it's an amazing group of individuals there. So I want to encourage folks to look at that when you can. All right, my strategic mindset right now. If some of you have been following some of my posts in the Ready Room and some of my posts in the Afterburner Intel, the question is, are we volatile? That's an easy one, yes. This is going to be a volatile year, period, and there's just no way around it. But we can trade that volatility. Right now, my overall strategic mindset is bearish. We're nearing a bottom. Everyone believes that we're nearing a bottom. The question isn't really whether we are or not. It's a temporary bottom because we saw it bounce today. This is one of those 200 bounce days. The question is it the bottom? And I don't see a lot to support that right now. So we'll just have to see how this goes. But the truth of the matter is I don't know. I really don't know. Just have to keep watching because there's just a lot of negativity. Markets right now is just in a full-blown rebalancing mode right now. And what I mean by that is, you saw this sell-off coming in here over the last month or so, especially in January. Same thing after Thanksgiving. There's a lot of rebalancing going on. So the institutionals are sitting on a bunch of cash right now. And of course, at the beginning of the year, everyone rebalances their 401k and so forth. So now there's a whole bunch of new money coming in that you have to deal with. And so that's going on right now. And so part of that during inflationary times is people are going to rebalance their portfolios. Say they were 60, 40, 70, 30 stocks, they're going to be looking at 50-50 bond stock mix. And you can't underestimate the size of that dump of cash as the institutions start doing that. So it's forced rebalancing is what it ends up being. We saw some of that at the end of the year, early on, and then we had a decent second half of September, and then here we go again. I didn't see the big sell-off I expected right at the end of the year. It actually came earlier, which was a bit of a surprise. And did we really ever get the Santa Claus rally? Not really. So retailers right now, though, are sitting looking at the 200s and the 100s on the S&P and jumping in, and you can see that this morning. There's a lot of buying going on this morning. Question is, will it last? This could be a pump and dump. This could be a sell into day. This could be the beginning of a turn upward for a while. But bottom line is it's going to be volatile. So, today the VIX dropped $1.60, and it's starting to drop a little bit more. That's not a lot. That's only a few percent, 5 or 6% down. So that's not a big move down into the VIX. So we're just going to have to see how that goes. Let the metrics work themselves out, because a lot of them are sitting at the 100s and the 200s right now. Are they buys? You'll have to be the judge of that. You're the pilot in command of your own airplane, just as I am. And I've done a pretty poor job of that lately. So we'll talk some more about that. So bottom line, there's not a ton of positive going on. We did get a bounce. There's really not a lot of leadership in the market nor in the country right now, which is a real problem in my opinion as well. Operational overall strategic, we talked about operational status. I spoke of no leadership. Right now, if you're long, your choices are you wait it out or you cut it. Right now, that's your option. You're the pilot in command. If you're short, take profits per your ROE. Follow your ROE. Whenever I follow my rules of engagement, I usually do pretty well. It's when I think I'm smarter than my own rules is when I usually pay the price, which is what's going on right now. I'm just longer than I want to be. If you're selling premium, this is a premium market. So if you're selling premium, what we watch for there, the big moves where you can take profits or the big collapses in your VIX. So if you've got some bull put spreads on or some short calls or something like that, when the VIX does collapse today, you might, even though it may have gone against you a little bit price wise, it may help you out as the VIX does collapse. So I don't think I've seen enough movement to really look at a VXX bear call spread. It's just too uncertain right now. So I don't believe that that's where we really want to go yet. I was looking at that this morning to see if that was an option to short the VIX, but with it down only 6% right now, I'm not feeling it. If you're in cash, smile right now and be working on your cash flow, Kings. Talk about that in a second. If you're trading, right now I'm trading volatile bearish. I'm already got my long positions on. I'm not adding to them. I'm not catching the falling knife. I'm not doing anything right now. So I have not made any trades today, and I don't plan to make any today. Tactical mindset right now, I'm in the quick strike mode, hedge mode, and I could actually put tredge in front of that instead of hedge. So, because there are some SPX trades. Yesterday, Wiz put on a double vertical, or he showed you how to do a double vertical. It was your choice whether you wanted to do that or not. So that trade, would go against you today, of course, just because it bounced, but that wasn't the point. The point was to cover the rest of the month here. So it is a bit of a trudge, and that was the 46.75, 46.85, and then the put was the 45.25 going out to the end of January. So he's got coverage out to the end of the month, and that's something to consider. But remember, with a double vertical, you got to be RR, so you got to be really, really convinced that that's where that's going to go right now. Oftentimes in that situation, I might put on a shorter term credit spread and a longer term call. So or call puts. I may go out to February just for the straight call puts. And then when the timing looks right, add the bear call spread. So you can leg into those as well. And, it's a burner trade on the bearish burner. So what's the difference in that and the double vertical would just be simply that instead of a call, you hedge that call with another call or hedge that put with another put. So you have 4 legs on. So you have a debit spread and a credit spread on. The nice thing about doing it double vertical style is that you can trade in and out of the short legs as required if you're comfortable doing that. So that was the double vertical. So February, some of you still have the SPX debit put spread on that was out about a month ago. I think we put it on when the market was up. So that's you should be looking at some pretty good profit on that. So I would stick to my ROE on that. If you're with a debit spread, if you're 70% of your available max, that's what I close a debit spread. It's very, very rare to to make huge money on a debit spread. However, I don't mean 70% profit. I mean, you look at the max. If you can make 5,000 on it, divide that or multiply that by 0.7. If you're 3,000 bucks up on that trade, you might want to start considering getting out. And the reason is, as the debit spread matures and it gets a little bit closer to the short leg, the profit is maxed out at that point, and until you let it cook a little bit longer. So you end up exposing yourself. So that's why I use that rule. If I'm 70% of my maximum available profit on a debit spread, I'll take it. So, and then you can work the short leg on a debit spread too, which I like. So we've been doing more of these. You've seen Wiz doing more of these, especially as treads and hedges, because you can control it. It's a little bit easier to manage, and it doesn't run away from you as bad or work against you as bad when the market goes up, which the bias is most certainly almost always up, unless we're in a full bear market. Right now we're in a corrective market according to most of the so-called experts. Hood, some of you still have the synthetic hood on. It just bounced off its all-time low right now, so I would keep an eye on that. The calls are elevated in price, but if you have the puts on right now, you might be able to take a little bit of profit on that, or roll them, or monitor them, or cut. Your choice. I just wanted to bring that up, that it's still on the radar out there. However, over the long haul, put hoods that take over Canada, I think, but also when it's sitting here, if I had it, and I don't now, but if I had it, I had the stock earlier, I'd probably sit tight and see what it does, because I do think that the brokerage companies are going to do well, because there's going to be a lot of trading this year. The volume is already showing that there is going to be a lot of trading, up or down. Let's talk a little bit. Let's talk a little bit about that. Some of you have heard me talk about pyramid. You heard Wiz talk about pyramid market, and what that really means. I just want to make clear with everyone. What that really means is you have fewer and fewer stocks participating in bigger moves. If you think back to '99, most of you were around watching the market. You saw Pets.com do these gigantic moves, if you can remember that, or AOL. And that's the idea. Now, they're not really around now. Okay, fine. But that's the definition of a pyramid market. Now, the difference is the way we want to keep track of this is we want to have companies that we know will be around in a pyramid market. So the market gravitates towards the profitable companies. The other thing that's going on is when the 10-year compresses or when the 10-year goes up like it's doing now, if it goes up slow, the market has time to absorb it. But these big moves, these 200 basis, 400 basis point moves like Monday, Tuesday, are ugly because the market can't absorb it fast enough. And so when it does that, the VIX shoots up, and then everything reacts off that. So that's why it does. So it drives a compression, which drives the algos initially. When the algos start trading PE, they dump. And that's what you see. The PE compression, instantaneous and institutional profit taking happens right quick. And then what we do is we look at it and we want to get in because we think we've got a good price, but we don't recognize that the P's are being compressed, and we catch the falling knife. I am so guilty of that with Mara. And so I've done a really poor job on that, and a couple of other stocks here we'll talk about. But so the VIX pops on that, you get the 10-2 flattens out. And I think some of you have seen my posts or some commentary about when you flatten out the 10-2, the flatter it is, the uglier it is, and the more the VIX wants to pop, because your short-term and long-term interest rates start fighting each other a little bit. Now, when we get in that situation, which is where we were yesterday, retail traders have been killing the market this last 6 months to a year, really been doing well. But this is when you get used for cordwoods. You got to be pretty careful here. And because you're a little bit more nimble than the institutions are, you can easily get sacrificed as a sacrificial lamb. So you have to be very careful. So today's a good example. We're up, percent or so, 1.5% today off the bounce. And is it real or is it not? If you went all in today, which some traders buy the 200, they go all in, you could easily get sacrificed today. But you might be right. But I would rather have some confirmation and follow through on this. So I wanted to bring this up here, really because this, Wiz said a bit ago, start getting your shopping list together. And I've seen some great posts, and I really am happy with with the list we're building. So we have looked at, but the bottom line right now is when he posted the other day about 1, 2, 3, and this is more of a continuation. That you still need to be in stocks that are sector leaders, that that are strong, that have pricing power, that have cash flow in a market that's volatile. Why? Because if you don't, your PE will compress further, and it starts making the overall valuation of the company drop. Bottom line, and I'll use Rivian as an example on that in a minute. So let's get into some charts and things like that. So I start my day here at the FinViz. I look to see really what's going on. Is this a bear squeeze? So market's picking up, Market Watch is picking right up to see if we might be in a squeeze. So a dead bat bounce, something like that. So they're reading my mind. They must be listening in this briefing. Tech stocks lead higher. Okay, we knew that. Growth bargains, maybe. We know that. Stocks gain 1% after being corrected. Yep. Okay. Stocks rise. So I usually just look at these top 5 just to see what the sentiment is. I look right down here and I look and say initial claims. Okay, so right now the initial claims was higher than expected. So that's a bearish sign. Is the market digesting that? When it came out a little bit ago, it really didn't move that much. But we'll see. So this could just strictly be a bounce, but that would contribute to a dead bat if we have that today. Existing home sales down a little bit. Interest rates are going to tick up in the housing market. More so, the interest rates are going to tick up on the swap side, so on the commercial side. And when you build a multi-million-dollar place for your business, 100 basis points is huge. So that's why it's so critical. Now, existing home sales, maybe not so much, but when the trend starts up, what it does, it creates a max blast into it, and then once it levels off, it usually drops pretty quick. So in other words, everyone's trying to get refinanced right now or get their homes squared away because they know interest rates are going up over the long term. And that's really, I think, part of what's driving, because the SPX is sitting, kind of hovering at the 100 right now. And because these housing numbers are great and the employment numbers are great, are not great employment numbers. So what does that mean? We might have a short-term peak in the housing market here until the summer really starts up again. So that could cause some uncertainty for sure. Then I look down at the futures, and it's the same thing that's going on right now. I look over on the European side and see which way the euro is going. I'll get into that a little bit more. So we come over to this is the Forex. So this is the currency market. And what's really important here is right down here, this scale. And you find the US dollar, and it's sitting to the far right. And this chart is read right to left. So what this says is the pricing right now is that the dollar is down below all these other currencies. Some of these currencies are considered risk currencies. Some of these currencies are considered safety. So the CHF, the Swiss franc, that's a safety currency. New Zealand dollar is an aggressive currency. Pounds is safe. Yen's a safe. Canadian and the Aussie dollars are risk currencies. So this is suggesting that we have a risk on day going. And in fact, we do. So that's what I look for in the FinViz. And then I'll look at the maps and I'll kind of see what's going on. Okay, the market's kind of overall green. The world markets are pretty much overall green, except for a couple of things. Taiwan semiconductor, and then some of the European markets. So banks were getting slaughtered in Europe. So that's how I look at that. I'm looking at the 10 here. So the 10's pretty flat today, and it has been for the last couple of days after it popped up. So that should hopefully hold probably through the end of the week, unless something crazy happens. Here's the VIX. It's been all over the place. So popped again. And this is a daily. And I try to step back and look at the daily. So we're still in an elevated VIX, and it hasn't really started to collapse too much. It's been flat all morning. So what does that mean to me when I look at an elevated VIX? That means that I'm going to pay a premium if I buy anything on the call side. So when I'm in an elevated VIX mode, I tend to look at the stock directly because I don't pay a premium for the stock if I'm going to trade. So I'd be more inclined to put on, if I want to go long on something, to put on the stock itself. And now if I'm going to sell it, it's like Wiz says, when volatility is low, you buy it. When it's high, you sell it. So if you had a trade that you wanted to sell some volatility or sell some stock that you took advantage of the volatility, it might be good. So if you had short calls on and your call position was positive, the VIX may collapse today and help you out. So you may not be ready to get rid of it yet. But if I'm down there looking to buy Microsoft synthetic or something like that, I may want to hold off a little bit on that to see some follow through because I'm going to be paying a premium for it. That's my point. Dollar. We got to keep the dollar in our cross check. The dollar blew up in November right here. If you can see the November time frame where I'm moving the mouse. And that's really what pounded us so badly towards the end of November. There was a rush to the dollar. Since then, it's just kind of been up and down. And the other day, the dollar sank when the bond market dumped, and that created some volatility, but then the dollar's been slowly recovering. I'll go through another chart in a minute, but you've got to keep that in your cross check because if people start rushing to the dollar, usually the market takes a hit. This has been all over the news. The Nasdaq's been down. Not really much to say about it other than the Dow's down, but there's a lot of things down right now. Here we go. So most of you saw President Biden last night on the TV. I am not impressed at all. It's almost to the point where it's elder abuse. He can barely make it through. So last night he was pumping his chest up, trying to get through and show the reporters that he was strong. But the problem is he really never answered anything, and most of his answers were completely wrong. They're fed to him. It's obvious to me. But a couple of things stand out. This one, invading Ukraine. We all pretty much know that at some point Taiwan and Ukraine are going to get invaded. What will cause, obviously, is that will cause the VIX to go through the roof when that happens in the world markets, and it'll ripple through the whole world markets. Now, what will happen? Usually people run to safety stocks like defense and things like that, but it could just cause this, it just could just push us over the edge. So again, that's one of those contributors that Wiz has been talking about where there just isn't a lot good going on right now. And so you've got to keep this in your cross check. Even if you're a chartist and you don't even look at the fundamentals, you've got to keep this in your cross check because it's a world sentiment driving the world markets. So it has to be in your cross check. He talked a little bit about this last night in his solo press conference. I don't know if he knows what he wants to do. Well, let's just throw that right out there and say, basically, well, we have no plan. Here you go. But we're gonna beat you up with a strongly worded letter or something. I don't know. I'm a little concerned about how this is being handled. I'm actually embarrassed the fact that this is our foreign policy, standing up solo last night. If you're going to be solo in front of a crowd, you should be able to handle the crowd. If you can't, you don't need to be up there. So, and obviously to all of us, that was the case. And then today, of course, Jen Psaki is going to be on today sometime and trying to answer all the questions that have come up over the last 24 hours, which will be pretty stupid. So Peter Ducey finally got a word in, just threw a good one in from left field last night when he was asking him why he's doing what he's doing. So what he wants to do, obviously, is he wants to try to get pieces of his plan pushed through, and Joe Manchin and company are not having any of it, and they're trying to get the filibuster through, which takes 60 votes, and that's not going to happen either. So the market traditionally likes gridlock, but gridlock with so much negativity and lack of leadership is a whole nother story. That bothers me a lot. However, anything could happen. One of the things you also have to keep on your radar, and I really just kind of gave this lip service until I really began to understand how hard this might hit us, is the supply chain problem. Those that can solve the supply chain are going to win. You know, Amazon has their own, they just buy up the supply chain. So they'll win in the end. The problem is they could take the whole broader market down. And so what's going on in Canada right now is food shortages to the point to where they're actually looking for younger truck drivers, and they're out actively recruiting truck drivers. But also the vax mandate is making these truckers go, well, I'm sitting in my truck by myself. Why in the hell would I want to wear a mask? That's stupid. So simple, but the government doesn't understand this. And I'm not animated like Wiz is on that issue. He is very passionate about it. I'm very passionate about it as well. It's the stupidest thing I've ever seen. But I love to listen to his rants on this because he's very, very entertaining about it. And he is exactly on the money here. This is the stupidest thing I have ever seen. My son got what we thought to be Omicron, and he was 2.5 days fine. We couldn't even get a test in 2.5 days. We tried all over town to get a test, no luck. Couldn't buy them, couldn't find them. It was a 3-4 day wait to get anything. So we really don't know. He's fine now. I don't understand why they're making such a big deal of it, but what do I know? Some of the folks were talking about invading, and usually in that case, you know, oil shoots through the roof. It may, but oil's already up there pretty high right now. You don't see right now, you don't see a whole lot of hedging going on in the oil market, especially from the airlines. American doesn't hedge, but United and Delta do. And Southwest has a hedging service. So we're not seeing a lot of activity right now, which tells you that they think that we're at a high. So we'll have to watch that. But if something happens that we have some sort of world event, you know, all bets are off. We'll look at the crude here in a little bit as well. This is a very volatile market. You're going to see me toggle back and forth a little bit here because you can find almost any narrative you want. You know, the bulls are out today. Tomorrow the bears will be out on CNBC, and you really never know. And you can find two opposing stories that are literally the same part, but opposing ideas all in the same day, these two stories here. So for example here, 3 inflationary takeaways. Okay, you know, wages are going to go up. Yep. Okay, but that costs money too to the companies. People pay more. That's what makes people the maddest, is that they have to pay more. And then of course, you know, all the work stuff here is here to stay with the inflation towards working remotely, and we've got a small paradigm shift going on how we do things. Now, as time goes on and we bring back production into the US, this may settle down a little bit, but the companies that can afford to do the technology are allowing their workers to work from home, is causing that push, which is also driving this push right here, the reasons why people aren't really looking for a job. This is, you know, COVID concerns. I truly don't believe that as much as the polls say. I think it's more of a faction that there's just so much money on the table and so many options, and they are going through some paradigm shift, and they've got daycare for their kids and all the expenses. And now, you know, the daycare wants more. My daughter's daycare has almost doubled in the last 6 months for her kids. It's awful. Commute, gas. And so I think personally, it's really the inflation that's driving a lot of this, and that they just have enough money because the government handed it out. But that's me, and that's what I think right now. The suggestion, though, is this goes away pretty quickly. Well, I hope so, because it's just causing issues all the way across the board. And then you turn right around and you go, okay, well, 7.5 signs that the market's breaking down. Well, I don't need to go into this too much because Wiz hit this yesterday really well. The tech wreck, the semis got slammed, the smalls are getting slammed. The S&P got hit, it's at the 100-day, and of course the NASDAQ's at the 200-day. And then the stock 3000s are down as well. The Russell 3000s are way down. So it's pretty ugly right now across the board. And then in the same sentence, you hear somebody come up and say, well, that's a perfect time to buy. And so that's where you get this philosophy of, you know, the dogs of the Dow, the buy the 200, and all the different techniques that you hear for strategy or for tactics. I will say though that there is some history in the fact that if you are buying the bigger stocks that are inflation sensitive, that even over time you still do better, even though they might be sensitive to interest rates. Apple's a great example of that. Apple is less sensitive to interest rates, but it still does okay. But then you look at, Autodesk had a big push, for example. Now, these are more traditional stocks, but I think everyone really needs to spend the time to make your own judgment. You have to look at the cash flow and the market pricing power. So in essence, can they pass these cost increases on to their people? Do you think Amazon or onto the consumers? You think Amazon can do that? I think so. You think Apple can do that? I think so. You think Microsoft can do that? Yes, Microsoft's looking to buy companies right now. They're about to buy one of the Electronic Arts games, or one of the gaming services, to expand their horizon. So again, when you build your list, look for the better stocks. So here is a little bit of history, and during Fed cycles, that there can be some bullish activity during the Fed cycles, but also to note out that there can be some seriously bearish. So once again, I'm overall bearish right now, even though we might get some bullish activity in the short term. When these things turn, they turn fast, and that's what happened. If you look back into 01, after the tech bubble popped, really looking beyond it was what was so tough, is because no one really could figure out when it was going to stop bleeding. You just didn't know, and so you have to wait. So what's working right now? Well, the energy was working, financials working, but then again, if you saw JP Morgan, which I'll show you in a minute, I think those days are past us now too for the earnings. One of the things I saw about Amazon is the cleaner story. Some of the analysts are looking at the different types of operational costs under the hood as Amazon transitions to its new leadership. Jassy's really just figuring out where to take Amazon. We're seeing the uncertainty in the market. One of the things, JP Morgan kind of lowered their price target on Amazon, and I think that hurt them a bit too, but they had some compression. Amazon has very narrow margins. They just have so much volume, but that gives them tremendous pricing power, even with the narrow margins, because when you own so much of the market, you can raise prices within that market and still be quite okay. I'm not changing or getting rid of my Prime service because Amazon went up 20 cents on something. I don't really care that much. So what you feel when you have Amazon is you feel that you have at least the latest inflationary pricing available and they're not gouging you, which is why I still think in the long run this is a good buy. I'm holding 100 shares of Amazon right now. I don't plan to get rid of it. I'm just going to trade calls on it. If I lose it, I'll sell a put and go back to it, which is what you see me do before. I just do the wagon wheel on Amazon. Microsoft picked up, or is trying to pick up, Activision to add to its Netflix style gaming aspirations and so forth. So that's a big acquisition. I'll keep an eye on this. $75+ billion. My son actually brought this to my attention, and he thought this would be something to look at. So I'm keep an eye on Microsoft. Now, it was down yesterday, obviously, but it might be something to look at coming up here. Okay, Bitcoin. Looking a little bit at Bitcoin, the Fed policies right now are going to narrow the PE on most stocks. The same thing happens with Bitcoin. It acts like it's got a wide PE. So in other words, it's tracking with the tech market at the moment. The RSI, or the interest level, the greed level that we've seen on Bitcoin last year, 1 year ago, Bitcoin was sitting at 40,000. Right now it's sitting, a little above 40,000. What's the biggest difference? The biggest difference is the demand. The demand's way down. So that would suggest that if it holds this level it's at right now, that there may be some support there. Then we'll see what happens. We might be at a bottom. We might not. A lot of companies are invested in it now, so we'll just have to watch it. This may be an opportunity, to go long on the Bitcoin. Maybe not. I'm keeping a close eye on it, but I'm pretty heavily invested in companies that support Bitcoin, Mara, Riot, and so forth. And I'm not suggesting that anyone does it, because it is a very volatile ride, and I don't know that I would do it again. But I'm in now, so it doesn't matter. One of the things that is happening though right here is that the hash rates are climbing fast. So while we're watching, let's just say Mara, while we're watching it get beaten up, it's holding Bitcoin. The hash rates on the company itself are climbing, and so a lot of the miners are doing that. So there will come a time where the hash rates pick up enough that they hold enough Bitcoin that the pricing power becomes less and less important as you go with it. And when it does pop, it'll couple a little bit more. So what we saw with Mara, for example, is it popped up a few months ago. There was a big squeeze, comes back down to reality, and then the interest wanes as Bitcoin wanes, and so it's coupled that way. So we'll see how that goes. Let me throw a couple of charts out. Now Bart, one of our new members here he's busy at the moment, but he's an expert chartist, and so you'll see some more of these charts as we go forward, but I wanted to introduce you to it. So this is tech over the housing in essence. And what he's saying here by this chart is we've seen a nice stair step in tech for a long run here. We had a little pullback, and then there might be a short-term bounce in here, but if tech runs over the market up until this point on the 786 up in this area, this ratio, is when we're really setting up for a hard hit to tech, which we have some of now, but this is simply just what we witnessed. These are monthly charts, what we witnessed in the last couple of months. So he'll watch this a little bit more. These are macro trends. And I don't think anybody doubts the fact that, that the value stocks are doing a little bit better than the tech right now. We'll have some more of these. I want to throw a daily out at you too. Amazon, when you look at the measured moves on Amazon, we are staring at one of the biggest price corrections that Amazon has ever had if it gets down into the 3,000 range. So we'll see if it has support at 3150. It likes even numbers. I'm showing some support level here, but we'll have to watch that. So do I know what's going to happen with Amazon earnings? No. Do I think they're doing well? Yes. Are we going to get a run into earnings? Maybe. I was more sure last year than I am this year on it. I don't know. So I wanted to go through a few charts with you guys. Let's start with Apple and just run through these. So Apple looks like it's sitting on an extension 161s. What does that mean in reality? Okay, fib stuff. What you see on my chart here is a Keltner. That big orange line down here is the Keltner channel. This recent pullback dropped it outside the Keltner channel. Traditionally, that's been a buy marker too for a stock, is when it hits the lower part. It's also sitting right on the 50. So is that a buy for Apple? Some people will buy Apple there. I put on a synthetic. I added to one of my synthetics when it was down the other day. That's really all I've done this whole past week. So that was something to look at. But you've got to look at Apple, because Apple is one of the few stocks that will decouple sometimes from the NASDAQ a little bit. It's so big, and so it has to be on your daily check just to see what it's doing. Is it a good price at 169? No, I was a really good price over here in the 120s to 140s. It really made a hard run. So I have a couple of 24 leaps on, but that's really it. And those just sit out there because I like to be invested in Apple at one given time, or at any given time, excuse me. My favorite healthcare stock, AbbVie, been on a nice run, sitting at the top of the Keltner. It's going to come into a squeeze, but if you look down here, the volatility within the stock is starting to climb. That's this red right here. So is it a buy now? Nope. Amazon, just looking at the charts, sentiment, is it a buy now? I don't know. It's below the pivot. This is a pivot point, so this is like a magnet. Let's just call it that. The volatility within Amazon is up high, and the demand is down low. This is a stochastic demand. So I'm looking at the long-term low right here, sitting at this dotted line, sitting at 31.75. So got to be wary. Amazon needs a little bit more support before I really could consider even going long with it. And it's obviously, I have it at 35, so I'm getting the crap pounded out of me right now, or 34, excuse me. Here's Boeing. Boeing went on a nice little run here recently due to some sales, but then when this 5G thing hit, the other day. It kind of hit hard on Boeing and the airlines. American bounced back today because it had reasonably good earnings. I posted something this morning about that, just basically because American didn't get hit at Christmas as bad as the others. And that's because we've already been in a shit show for a while. I work for American, if anybody has any doubt about that. I can't comment on the 5G other than the fact that they're working on it. And the Boeing aircraft with HUDs, with heads-up displays in them, have already been cleared because they don't necessarily have to have perfection to be able to do an auto-coupled landing. So there's some statements in Boeing's guides about that. Airbus is working through it right now, as is CRJ Canadair. So can't offer much more on that regard. Disney, I'd like to look at that side of the fence here. Most of you know I got the crap beat out of me right here in Disney in December. I was selling covered calls along here, and I made the mistake of selling into earnings. Don't do that. There's a reason we don't do that. This unpredictability hit, and I ended up taking about a $20,000 loss right there. Fortunately, I was able to dig out most of it in December, but I still have 100 shares on or something like that. So I'll sell covered call on that till it goes away. Disney, if Disney is going to run, it's going to start its run pretty soon here. And you can see down here that the IV of Disney is starting to drop and the demand is starting to climb. And this is on a daily basis. And if the daily chart doesn't look good, then why are you trading it? Otherwise. I tend to go down too far into the weeds sometimes. Facebook. Why would we talk about Facebook? I hate Facebook, but Facebook is going to be one of the players in the metaverse. So the folks that are tracking that metaverse growth, it's a new growth area. I have 100 shares of Facebook right now is all I have in about the 340. I bought into this trend line right here at about 332 is where I'm sitting right now. So I'm getting beat up a little bit on it, but not bad. Earnings dropping off a little, yes. Is it going to be a good company for the long haul? Probably so. I wouldn't buy calls on it. I would only buy stock on it or sell a put on it. But again, if the market gets hit, Facebook is going to get slammed, and then it'll have to dig out. I can never call it Meta. Okay, copper. Anybody see a trend here? Copper's running. Is this the time to buy copper? May have already happened. So I'm at the top of my Keltner. I've got pretty good demand, but look at the IV starting to climb internally. So I would probably sit tight and let it pull back a little bit. But for the long term, if you can get it on a pullback, this is a great little covered call tactic. We're going to need copper for all the electric motors that we're all going to have on our electric cars when we can't get a gasoline engine anymore. And we're going to hate it because the electric grid's not going to be able to handle it. Google, once again, I can't stand Google, but people have made a lot of money with it. But Google doesn't look like it's ready yet. It might be turning, it might not, but it needs some follow through for some of you that trade Google. I know there's several of you that play 1 month out Google calls. So I wanted to bring that into my cross check. Hood, I know that there's several folks holding a Hood synthetic. We just hit an all-time low with Hood. So you have a gut check here, whether you're going to hold it. You really can't do much more damage with it right now at the moment. It could go lower, of course. If we get a slam, it might go down into the very low teens or 11s, but might be worth the gamble. I think there's going to come a time where Hood's going to start pushing forward as more lightweight trading, more retail traders come back to the market. But right now, the retail trader is a little bit on the scary side because none of them have ever seen a down market. And if you've never traded a down market, even I've been doing this a while, I still struggle to switch my mindset to bearish. And that's something Wiz talked about yesterday, is switching your mindset. You can still trade long in a bearish market if you trade it correctly. So you can do that. If it's a mild bear market, you can still sell covered calls and take profit, the profit comes largely from the short side, and you use a long call diagonal on the long side. But eventually, when you start trading, you have to flip inverted, buy long-term puts and sell puts against it. So when I sell naked puts, I can easily switch to a bearish mode just by going out and selling long puts or buying long puts. So that's something to consider. So right now, some of you are in a synthetic with hood. So you just need to evaluate whether you want to stay in for the volatility. Because the volatility being elevated will make the call look a little bit juicier than it is in reality. JP Morgan, nice, got slammed. The banks lead us in, banks lead us out. If that's the case, this isn't looking very good. Now, is that money rotating into tech? Well, today it is. How about tomorrow? Don't know. So for me, I'm just going to watch and see what happens if it's going to rotate into tech. It angers me sometimes to not be able to catch the gap when tech does run, but right now I would rather have a 20% or 15%, 30% gain on a short-term trade than risk losing all of it on a 50% longer-term trade. So that's why I talked about short strikes in the tactics. European banks are getting pounded even worse because they've got a credit crisis going on within the banking industry in Europe. It's pretty ugly. Bart's going to put out some more charts on that next week. But right now, in essence, sovereign debt in Europe is not worth buying. So they're obviously trying to get into the dollar and cover, but that's not working for them right now because a lot of the banks from the U.S. have told them no bueno. Mara, are we at a long-term bottom for Mara? I don't know. The movements are smaller, yes, but we're well below any support level. So before I would buy into Mara, I would like to see a little bit of leadership. It's maybe just starting to turn, but Mara, when it turns, it'll make a bigger move. I don't see any reason to fight really hard to try to get in directly at the bottom. I'm already long, so I've taken the hit already. I'm just going to sit tight because I have stock and not calls, and I don't have any theta working against me. Microsoft, we talked about the acquisition of Microsoft. So this dotted line, if you can see it, my green dotted line, that's the 200, the 169, the 144, the 100. Those are layered EMAs. So Microsoft is sitting below the 100, above the 144. So it's kind of in a little no man's land right now. So we'll have to see how it reacts over the next few days based on the acquisition before I would even think about putting on anything long Microsoft. So right now I'm still bearish on Microsoft as it's coming down. Vail got pounded, but the actual businesses are doing quite well. Everyone wants to get the hell off the East Coast and go skiing, I suppose, which is a good thing. So is this going to turn soon? Probably. This might be a player. So down here in the 280 range, if it gets down this far, is a full symmetry. So Wiz used to trade Vail a lot. I wanted to get this back on everyone's radar and let's start looking at it. And he'll probably talk about it in the next couple of weeks as the picture gets a little clearer, whether we continue to pound it into the ground and reverse it, or whether we actually start trading it upwards again on a bull put spread. So right now, I think we're kind of in no man's land there. Netflix has had some good news lately. We did see a turn right here on Netflix. We're sitting on earnings. So I would suggest everyone put Netflix on your tracker today and just watch it, see what it does after earnings today. There may or may not be an opportunity for you. The internal volatility is very high, but they're buying it today because they're trying to buy the earnings. So I'm not trading the earnings. Let's see what it does. Rivian, stupid trade for me. I traded Rivian along this 100 line for the longest time, never had any trouble, short puts. Then this Chrysler news comes out, right about the first of the year, and my short puts go down, 30 points already. So I'm very upside down on it. So I'm just going to roll it for a while and we'll see how it goes. And if it recovers, when I get it to acceptable loss, I'll punch out. This is the bond volatility. It's been pretty flat. Even though the bonds have gone up, it's been pretty flat, which means it's not a taper tantrum as much as it just simply is bond rising. But once in a while you need to look at that when there's a big move in the market. Tesla made a recovery today, but it's still very volatile. But Tesla's still well above the Keltner. So is it a buy right here? Maybe not for me though. Not when it's 30 points up. I'd rather see what's going to happen again as the market shows any leadership. XLY obviously is the way I play Tesla. I never buy the stock directly or the calls directly. This is a stock of mine that I use, a software company called Upstart. What they do is they have a credit rating system that uses AI. So, and eventually someday they will replace Equifax. It's a full symmetric. Actually, let me open this up a little bit. Full symmetric run right now. This thing ran up to $400. It got way overextended. Consistent earnings, consistent cash flow, but it's now well below the 200, and it's down here near a symmetrical bottom. So this could be a buy here. I would suggest you keep that on your radar. Right now I'm short puts, so in essence I'm long Upstart, and I was long Upstart at the 135, which is right here at this little shelf. I'm gonna have to wait it out though. I was early, so we'll see. That's a possibility. This thing has a lot of upside, so I would get that one on your radar. We talked about the VIX earlier. In the time we've been talking, it's come down about 30 basis points. I wanted to show you another VIX though. This is VXN. VXN is the NASDAQ VIX. It actually has its own VIX. Yesterday, when the NASDAQ began to turn a little bit and the Dow began to turn worse a little bit, I looked at these two VIXs against each other, and the VXN turned negative quicker than the VIX. Today they're running neck and neck. They're both up about the same percentage or down the same percentage, but this is also an indicator to keep on your cross check. So on my desktop, what you see here is you see VIX. In the lower right corner, there's a little quad chart. This is the daily VIX on a 2-minute chart with the Bollinger Band. So as it gets wider, that means a lot of crap's happening. As it narrows down, that means things are quieting. So the VIX going down is a green thing, and that helps me to figure out. This is the put call ratio. We're sitting at 0.6. Nominal is 0.57, so the market is returning to some normalcy today. The tick is the sentiment of the market. If the tick is above 0, it's slightly biased positive. If it's 600, where it is right now, that's a normal positive. And the advanced decline line simply means in the New York Stock Exchange that there's advancing more than there is declining. We're sitting at 1,900 positions advancing in over and top of declining. So obviously the market's up today, but you'll see these trends sometimes turn quicker than the actual market, especially when there's a Forex issue. Something happens in the Forex market. It takes usually somewhere around 8 minutes for that to actually translate into the market itself. And you may see it in the tick as it starts to turn the sentiment. But I wanted to give you that one too. This is I'm long this, so this is Daniel's company Wasana. It's one of the players in the psychedelic space, and I'm real impressed with what I've seen so far. So I have 500 shares of this just for now. This stock is not highly traded. Don't go jump into it right now because you'll drive the price up for it yourself. Take your time if you decide that this is one you want to look at, but that's one I'm in at the moment. And of course, XLY is my preferred way to play Tesla, and I get Amazon exposure as well. So this is my preference. We're sitting right now, right out just above the 200 on the 169, 144. These two dotted lines are what we call the profit zone, and this is one of those areas where you can grab. Oftentimes you can grab a stock that'll bounce in there. You might see some support there before it gets to the 200. If it shows support there, then you have a little bit more confidence that it might hold or return. However, I'm looking up here and the volatility is still a little bit high on XLY, which is something to look at. So again, that's why I'm not trading XLY. I'm just watching it. But it made a big move today. It's up, almost 2%. So those are the stocks that I wanted to go through. And just in general term, I wanted to back up and say, I'm still very cautious about everything, and you're going to see me trade volatility. And when I mean that, I'm going to be trade stocks or positions that take advantage of volatility. So if I'm in a long position, I'll sell covered calls. I'll sell short puts if I'm bullish. I'll turn right around and go the other way. A bear call spread, if I'm bearish on something, a bear call spread, you're selling the volatility. So that's a good way to do that. If you're going to do a hedge, then with puts, then a spread is good, because as it goes through your debit spread and goes towards your long spread, the actual theta will turn negative, will turn positive, and the position doesn't cost you any money anymore. So I like put spreads, and that's why you see also Wiz doing for his treads, he'll do a debit put spread, which if it really rips, you give up a little bit of the upside, but if it really rips on you, the being able to trade out of the other call or other put position is pretty advantageous. So anyway, I just wanted to go through a lot of that with you all. A lot of data coming at you. I'll put this up on the recording as soon as I can get it to Wiz. I will also in the ready room, if you guys want me to post some of these links, I'll try to put some of those links up. So let's wrap up. I have the questions turned off because I wasn't sure how to exactly get all these through. I see some questions coming through. Some of the data is a little bit old, but that's okay because it still is pertinent. So I think Rick asked how the profit zone is displayed. I keep it real simple. These are intermediate EMAs, the 169, 144. It's something that one of our members has taught us to look at the intermediate between the 100 and the 200. So it gives you an idea. And I don't have to draw the fib lines. So that's something that I've learned to use from one of our other members. Okay. So that was really the big question. Oh, someone asked the charting software. This is Thinkorswim, and these are my custom scripts. If you're in MABT or Hunters, then you get to actually take advantage of some of these scripts that I've borrowed or written or put together. But it does give you an idea of what's going on, especially if you go down to a 2-minute or 5-minute. It tells quite a story. Let's see. Why are the banks bottoming out? Well, two things are going on. Number one, the world doesn't believe that the banks are that profitable. Neither do I. Number two, earnings are pretty much over now, so there's a standard rotation out of banks. Are banks going to carry us through the interest rates? I don't know. What bothers me about it's the swaps. What I mean by that is right now at night when the banks don't use all their money, they can swap it back to the U.S. government to hold it. It keeps them from having to pay interest on it. There's billions and billions of dollars doing that. So what that is that's actually QT already starting and have been starting for a while. It just isn't official. And there's a $1 trillion a night that goes back and forth. So that tells me right now that the money's not going out anyway. So that means they're not making money on it. So I think the market is starting to price a lot of that in. I'm just not confident on what I'm seeing with the banks at all. Someone asked about CSX. I'm not following it right now, but we will. I'll put that on next week's. I'll take a very quick look at it. We've traded CSX plenty, railroads, infrastructure. Let's go ahead and zoom up there a little bit. It's kind of in no man's land right now. We'll have to see. It is below the Kellner, but it's really not. There really isn't a whole lot of support under it. So, and of course, it came down and it split. It came down again, and it's not making the profit right now. So, thing is, oil's going to go up, cost is going to go up, labor is going to go up. So we're just going to have to see if CSX can hold it together. So right now, I would say no. I'm not interested in it at the moment, but I'll put it on the radar. Paul Pelosi bought the 50. Yeah, surprised. Silver. I'm not trading silver or gold right now. I can't seem to get in front of it correctly. And I don't know how much Bitcoin is influencing it or not. We probably will see a run on silver and gold as inflation confusion keeps going up and up. We'll probably see that. But I've not had much success. I know these charts are kind of busy, and I really just wanted to focus on just the last few ticks, and that's really what's important here. the last few ticks. And you know, if I do this again, I'll maybe simplify it, but what's really important overall when I looked at these charts, if you look at the recording again, is where the Keltner sits, which means, you know, where the traditional buyers come in, and then what the support levels are underneath it, where the buyers tend to come in. And then if you're at the top, so should you be buying anything up at the top of the Keltner channel? Probably not. But this volatile market, these swings get bigger and bigger, and it's a very difficult decision sometimes whether it looks like a good buy, it's come down, everything looks pretty good, but it's not. And that's the beauty of a pyramid market. The swings are so big, it's hard to stay on top of it. So I wanted to share a lot of that data with you. I want everybody to get a chance to maybe digest some of that. I've given you a few stocks to look at. We'll reassess next week and see where we are. I don't plan any further trades today. If I do put something out, I'll throw it out in the ready room, and then I'll give it to Wiz. He can post it later in the evening, but I don't plan to trade any farther today. All right, I'm gonna go ahead and wrap up here. I appreciate everyone being on board. Thank you for my first mission as a mission lead here, and I appreciate and thank Wiz for allowing me to do this and trusting me enough to do that. I'd like to have everybody have a great day. Make sure you hedge. Fights on.